Hello, everybody. This is Dr. Richard Smith, and this is Cycles TV. And it's good to be with you again after a little hiatus. I hope everybody had a good week last week. Some of us in the United States, at least, had a little bit of an extended downtime. So that was great, much needed. But we're back at it. And this is trading market cycles. This is about identifying short-term cycles in markets, but also really trading cycles and trading, period. So I am trading right now. Got my charts up over here, active in the markets. I'm using what I'm sharing with you in this series for my own trading in real time. And that's what this is all about. So this week, we're going to be talking about bonds. Bonds have to do with rates, right? Interest rates and inflation, and a pattern, a trend that I'm seeing, cycles that I'm seeing that suggest to me that bonds are probably bottoming, maybe not right away, but over the next few months. And means rates are coming down. Probably means inflation isn't about to run away from us. We'll see. It's what the cycles say. We're going to get into it. Before we get into that, though, this is trading market cycles, and we got to talk about trading. So give me just a minute here to adjust my screen so I can still pay attention to you, but also not clutter things up too much. All righty. Now I'm gonna almost there. All right, we'll just do this over here. And now, voila. All right, so this is trading. And I need to talk a little bit about the fact that trading is risky and hard and not to be taken lightly. And I don't say this to be discouraging. I don't go over this every time we get together. I guess I'll stop after a few more episodes, or, make people sign a waiver or something. But look, I just want you to be successful, okay? And this is a big part of being successful, is having reasonable expectations, accurate expectations about what it takes to be successful. It's hard. This is not, it's like jumping in the ring against, Mike Tyson or Hulk Hogan. Okay. We're the little guys here. So most people lose money trading, especially when trading with leverage. I'm trading futures, and that's a lot of leverage. It's risky. It's difficult. It can be done. I'm telling you, it can be done. I want you to be hopeful, but I just want you to be realistic too. Buying or selling decisions are solely your own. I'm here to educate you, to show you what I'm doing, help you learn to use the foundations, technology, but you're the one that's pulling the trigger. It's always you. It's not me. You may get an idea, but you're the one pulling the trigger to buy or sell. This is not professional investing advice. This is educational, and it is free. And your situation is utterly and completely unique, not the same as mine. Too many trading ideas is a recipe for disaster, because we can talk ourselves into anything. The stories that we tell ourselves are the most important stories of all. And when you have so many different ideas, you basically just get to pick and choose for whatever you're feeling, but that's not good. Ultimately, you will be successful when you settle on a simple system with good risk management that is aligned with your situation and beliefs. And that's what I'm sharing with you in this series, is my system. It's aligned with my situation and beliefs, and involves cycles. So, and your biggest enemy by far is what I call, not me, but overly optimistic beliefs. Okay. You get on YouTube, somebody tells you, oh, look, there's this great signal and just do this and you're going to be successful. No, that's overly optimistic beliefs. We know that people who promote their beliefs overly optimistically to others underperform the markets. That's not what this is about. Got to watch out for OOBs, overly optimistic beliefs. Continuing on trading wise, my philosophy, loss aversion is our biggest enemy. I've talked about that over and over again. And it just kind of is a setup for, I'm looking for big moves that defy logic. I want irrational profits, not irrational losses. So that informs my trading. I might have a lot of different trades on at any one time, but I'm looking for the ones that are working for me and to kind of shift my capital into those and keep tight stops on the ones that I'm not sure about yet. I use trend cycles, including seasonality and sentiment across multiple time frames and diverse asset classes. I trade futures, leverage, sometimes 30x leverage. Okay. And I believe that trade, risk, and portfolio management are more important than buy and sell signals. As Jack Schwager told me about all the market wizards, they're all totally different, but they're all pretty religious about risk management. And I believe that hook, line, and sinker. And last thing, this is also related to irrational profits, loss aversion. We need to take more risk when we're up and less when we're down. That's from Ken Grant's Trading Risk. That's how I trade. That's what informs my trades. And that's why I'm sharing with you what I'm sharing today. All right, so let's start to get into it here. First of all, I just wanted to review some of the calls that I've made over this series so far. I've done 3 episodes, and I'm 0 for 3. Okay, so it doesn't bother me. I hope it doesn't bother you. That's reality in trading. I've said all along, these aren't the only trades that I'm making. But if we look here, this was the Bitcoin call back on June 11th. Right here we were. We've got this nice 116-ish, 120-ish cycle. Right after, during the episode, actually, we bottomed and we got this nice upturn here, and things were looking like, whoa, what a genius. But but quickly, reality set back in and humility took over, and we went straight down into this up move of this cycle. We hugged the bottom of the cyclic RSI here. Did get a nice, additional sell signal off of here down into a nice bottom here. Tried to get back up, but came back down. And now we have, if we bring this cycle up to date with the latest data on Bitcoin, can still see the cycle is active. We got a pretty nice buy signal on Bitcoin right now, and I'm long Bitcoin right now. This cycle didn't work back here. I had a tight stop on it. It was actually about where I bought because we got that nice bottom right there. So I didn't make money, but I got out. And right now, this cycle is still working. It still sticks out on the spectrum very nicely. And I love this cycle. It's just one of the best cycles I've ever seen. This is 2-hour data, of course. That's what I've been doing all along. All right, the next call was a short signal on crude oil, or setting up at least for a short signal back here around June 18th. Nope, 0 for 2, right? Hung out here above the top of the cyclic RSI band and then down, but we didn't get a bottom, didn't get a down move going. Next move up was pretty good into a top. At the moment, looks like we're heading down. So got a nice win here, and so far a win here. We'll see if we integrate this to the latest data. Can still see this cycle, this 148 cycle on crude is working pretty well. And we're definitely got momentum going down, coming into a bottom here on the cycle. I like energy, especially gas and oil on the short side right now. But it didn't work perfectly back here. It's working pretty good at the moment. And then the last call was right about here when I, again, went live and said, hey, looks like these cycles are topping. But we did get a little top, and then we've been rallying on equities, right over the past week and a half. And we do have big momentum divergence here between, the high here and the high here. While momentum has not made a new high whatsoever, it's actually been quite weak. So I'd say this down move in equities is still in play, but equities, as I said back when I pointed out these bearish cycles, the trends are still just totally bullish in equities. We haven't seen any reason trend-wise for the cycles to magically change things. So watch out for the down moves in equities not materializing. I am short right at the moment with a very tight stop on equities based on my 2-hour charts, but not going to be sticking around for long if we don't get something here ASAP. All right, so that's my 0 for 3 track record so far. Want to tamp down those overly optimistic beliefs. Now let's talk about what I'm seeing in interest rates. So this is the Fed funds rate going back to 2000 or so. And the first thing that I just want to look at here is the fact that, here we were in 2006 and 7. We got the Fed funds rate up to 5.25 right before we started to see it come down into the Great Recession of 2008 and 2009. I think we all remember that. And here we are again today. So since October 23, so it's been about 8 months now that we've spent up around, 5.25, 5.5 on the Fed funds rate. How long? It was July 2006 to almost a year that we spent at that rate back in 2007. So I think rates are likely to be coming down, not just because of this chart, but I think it's interesting to keep this in mind that, we're right where we were before the Great Recession. Now that Great Recession, 8 months in, it didn't happen until like another 6 months after that. But I think we could see something here similar, by early next year. All right, so with that as background, let's see. Good to see everybody. I'll try to keep an eye on comments, but I'm going to get through this material first. So again, I'm doing futures and going to start by looking at the big picture. And these are the weekly cycles on the Treasury markets. So the 2-year Treasury notes here, weekly cycles on the futures from Yahoo Finance. So ZT equals F dash W, Yahoo Finance. You don't need, this is, just part of the basic membership of the foundation. You have access to this. You could do this yourself. And we see pretty clearly this, longer cycle here in the spectrum, 304. It's the number one cycle from the AI. It's got a Bartels of 92, the number one strength cycle. And we can see, going back to 2000, it's been pretty amazing, right? Top, bottom, top, no bottom, top, bottom, top, bottom. Very interesting to me. If we zoom in here a little on the weekly chart, we see, again, momentum bottoming way back here. So we've had a long period of momentum rising with prices not rising, moving into the up part of the cycle with bullish momentum on the 2 years. So that is pretty compelling. The 5-year. Oh, one more thing on the 2-year that I just wanted to highlight. Back to 2007. So we've got a lot of, we're right back here, 2007, right? Remember I showed those Fed funds rates. So we're bottoming here in 2007 and, probably bottoming here again. So we've got pretty much right at the lows again, retested the 2006 lows. Had a good, head fake here that didn't pan out, and higher low and upward momentum. So looking at that, it's a pretty compelling setup. We see a similar thing in the weeklies on the 5 years. Okay, again, bottom 2007, bottom 2023, positive momentum divergence. Pretty bullish on the weeklies. Similar in the 10 years and similar in the 30 years. So all of the weekly cycles in the bond complex are up. Now let's look at the daily cycles. Here are the daily cycles on the 2 years. Again, the number one cycle, 194, been bullish for a little while. We've got it sneaking up, momentum still up. So we've got bullish on the daily, 2-year. Similar cycle, about 184 in the 5 years. Also bullish and has been for a while. 10 years on the daily are lagging behind a little bit, but turning bullish, right? Not as far along as the 2s and 5s. And then similar with the 30-year as well. And they all have this cycle around 190 to 200. So there's 199 on the 30-year, 198 on the 10s, 184, and 194 on the 5s and 2s. So across the spectrum of treasuries, weekly data, daily data, we're seeing a lot of reason to be optimistic from the cycles. Okay. We are going to be getting into what are the short-term cycles indicating, but I want to set the table here, give you the big picture of why I'm, looking for opportunities on the short-term frequency to accumulate in bonds and get into, longer-term positions that I think could be very profitable long-term. We'll see. So let's talk about sentiment. This is the commitment of traders commercials. So the smart money in the futures markets. These are the 1 to 2 year treasuries. On the bullish side, definitely above 0. This goes back to 22. So not as bullish as they were back in, end of 23, but still pretty bullish historically. If we look at bonds a little longer, these 4 to 6 years seem to be kind of the sweet spots for the institutions. Very bullish as they've been for a good while, for the last couple of years. And if we look out a little further, like the 6 to 10 years, a little less bullish. So what I'm seeing, from the smart money is kind of favoring this 5-year treasuries, even though I'm a little partial to the 2 years myself. And then lastly, looking at kind of the small investor sentiment. So these are, small traders getting very bullish, not quite there, right? But we saw they were very bullish back here, which was a negative for the market right now. So kind of bullish, but not overly bullish. All right, so that is the bigger picture, which is the smart money is bullish. The cycles are bullish on the dailies and the weeklies, and we haven't really gotten the price action yet that that I think we're ultimately headed towards getting, over the next 6-12 months. Last thing, big picture wise, gonna highlight here. So this is a new view that I've put together since the last time that we talked, where I've talked about how, I really want to be aware of what the trends are on my shorter term time frames and my longer term time frames. And I want to show you here in the bond complex, 2 years, 5 years, 10 years, 30 years, right? The short-term trends are starting to get green. Okay. Longer-term trends are still a little problematic, but the short-term trends are turning green pretty much across the board here. I know this looks like a lot of data and it probably is confusing, but what I'm really looking at is that my shorter-term trends, my medium-term trends are turning green, and I think gradually overcoming the red of the longer term trends. While we're here, just, as long as we're here, look at the trends in the S&P and the NASDAQ, okay? So just green across the board, okay? Short term, 20 minutes, 250, or the 2-hour data, the daily data, and the weekly data, just bullish, bullish, bullish. So as we're looking at the cycles, suggesting juicy shorts, keep your stops tight as long as we're in these really bullish trends. And we're really not seeing those trends give way yet. So something to keep in mind. Here's my big picture chart that I've shared a few times. Let me just make this a little bigger for all of us. And, we've got some negative trends in stocks, cycles, but again, the trends are very bullish. So if you want to try to short these cycles, keep your stops tight. But today we're really focused on treasuries. Again, the shorter term trends are starting to move up. Daily trends kind of neutral. Weekly trends still negative, not surprisingly, because there's been brutal damage. But when we see this shift starting to happen on the lower time frames, inching into the daily, not yet taking over the weekly, and we've got bullish cycles here, okay, especially on the 2s and 5s. See this? This is what has me interested in gradually, slowly, probably not back up the truck moment yet, but get involved to the long side, use my short-term cycles to look for opportunities to accumulate, shorter term treasuries on the long side. So let's look at what the short-term cycles are saying. So we're back to the 2-hour data in treasuries now. And this, we can see here that we've got a pretty prominent cycle here at 271. And the cycle's done a pretty good job. This data here, this light blue data, is out of sample. Okay, so if you had gone short here and gone long around here, you'd be pretty happy right now, right? But let's integrate all the latest data. Cycle shifted a little bit longer, but we had a buy signal on the 2-year right about here. Okay, and I think we could well see it continue through the end of the week or early next week. is when this cycle tops. Momentum is, fading a little bit here, but not too bad. And so far, this cycle's been working well. And this is the one I'm watching on the 2-year. And I'm long the 2 years right now. And the trends are positive and the cycles are positive. You can also look at the 20-minute data. Got this 206 period cycle here. Also bottoming and not yet giving a buy signal from the cyclic RSI, but keep an eye on this one as well. And then finally, the 5-year cycles. This is also this 279 here. What was it on the 2 years? It was 275. So on the 5s, we got a very similar cycle. Very good out of sample performance. We can update it to incorporate the latest data. We see that cycle lengthening out a little bit, but we got a pretty nice bullish signal on the 5-year treasuries as well from the 2-hour data. So both the 2s and 5s, nice buy signals in the context of developing bullishness in their trends. If we look back here at the 4 to 6 years, right? Commercials, the smart money, very bullish. And that's really the story. So overall, I've been following this for a while, looking at how the bond market is, shifting to positive cycles in the dailies and the weeklies. The daily trends are starting to shift, not quite there yet, but the shorter term trends are shifting. So that's why I'm interested in the long side, and I'm using these short-term cycles in the 2s and the 5s to build positions and hopefully be on board for what I think could be some very big moves in the treasury markets to the upside as rates come down, as recession probably finally comes out of the closet, so to speak. And that's it. So, all right. Hopefully, let me just this view. There we go. So with that, let me take a look at what's on your minds. So good to see everybody. Bill, great to see you. Over the moving averages, long or hour and vice versa. 200-day, 40-week is the long-term indicator. 20 and 50-day are key shorter term. Agree with that. Longer out. wish I could type. Got it. When the 2-year declines, what will you roll into for income? I think that's what the 5-year is starting to look good. I agree, Bill. I definitely agree. So, look, the trends are up in equities still. Most of us in the cycles world are bullish into the end of the year, been expecting a correction, haven't gotten it. Not surprising to me, really, given that, we all kind of expect cycles to be higher by the end of the year. Maybe not all of us, but a lot of us do. So not terribly surprising that we haven't seen a significant correction. Starting to see some noise in the media about corrections of possibly 10%. I'll take it. I'd love to see it. But in the meantime, careful on equities. Yes, the cycles are the shorter term cycles, 2 hours and dailies rolling over a little bit, and looking up on treasuries. So that's really what I wanted to highlight today. And hopefully that's been helpful to you, at least to see how to use the cycles analyzer on intraday data and to start to look into some of those opportunities for treasuries, especially the 2 years and 5 years, and keep an eye on those cycles. I think it was about 275, 280. And hopefully it'll work. So do you experiment with starting date of the data? Shouldn't the analysis start at a significant high or low? So thanks for the question, Sid. I do tend to, let me go back and share my screen here. Give me just a second. So, whoops. Sorry about that. I was trying to avoid the infinite screen view. So let me get back here and then share my screen again. All right. So going back to the 2-year or the 2 hour on the 2-year data. So if we look at where I started this, yes, I started it back from this high on the 2 hour charts. It's about 1,500 bars. That's about right for, a 275 period cycle, because 6 times 275 is about 1,500. Let's see, 550. Yeah, it's probably in that neighborhood. So this is about 6 iterations of the cycle. We can see 1, 2, 3, 4, 5.5. So that works out pretty well for this cycle length. I don't always, anchor off of highs and lows, but I have found that overall, I do like to anchor off of highs and lows, and I like to get about, 6, half a dozen iterations of the cycle for me to feel confident about it. So thanks for the question, Sid. Any other questions in there? Brett, maybe incorporate price cycles and volume. Let's see. Cycles with the time cycles. I mean, these are price cycles. I mean, they're in time, right? So sounds interesting, Brett. Love to learn a little bit more about it. Price cycles and time and volume cycles. One of the indicators I do use personally is the volume profile. At what level of prices have we seen the most volume? I find that a good tool for support and resistance levels as part of my trading. But I'm not sure. I've never looked at cycles in volume. So yeah, could be interesting. All right, gang. I think we've covered some good ground. Plenty for today. Let me get back to stop sharing my screen. And it's a wrap. So be careful out there. Be realistic. And so far we've covered crypto or Bitcoin, energy, oil. We've covered equities, and now we've covered treasuries. We're almost getting to all the different kind of asset clusters, let's say, that I trade in the futures markets. So I think over the next, 1 or 2 episodes, we'll start to get into how I put all those together into a portfolio of bets, a diversified portfolio of bets, and how I also kind of combine these and look at my overall exposure at any given time in the markets. Very important that I know kind of what I might have to put up with in terms of volatility, and that's immensely helpful to me. And also, how do I get new ideas, right? So just briefly, maybe a little preview of that for just 1 quick minute. I actually wanted to share this with you. So give me just a second here to share my screen again. Last thing. And right. So this, I'm sure this looks like a lot of information, but this is actually my current portfolio right at the moment. So short 1 NASDAQ E-mini, short 4 Russells, long 10, 2 years, etc. Short 1 gold, I'm pretty short metals right now, and energy, short copper, short palladium, short platinum, long Bitcoin and Ethereum, and long natural gas. Actually, sorry, not long, and long the yen. This portfolio has a 64% diversification when I'm looking at it over my 2-hour time frames. And, you know, the number one uncorrelated idea to this portfolio is the euro or long treasuries. So kind of adding to the long treasuries could be interesting for this portfolio. So these are some of the things that I want to get into in the weeks ahead. First, want to really focus in on what are the good short-term cycles to work with in particular, and then get right. I keep messing up here. How do we combine these trades into a portfolio of bets with good diversification and kind of manage our exposure and look for the next great idea? So that's it. Hope everybody has a great week, and we'll see you next week. Thanks.